Hey guys, it's a market update. As we start to recover now, this is the second week that we've got a potential green candle here. We had a nice recovery last week. I'm going to ask the question, is it go time? Right, have we had the sell-off? Was that it? Did we print the lows? Are we now going to climb back up? I've got some macro data and some on-chain data to show you right here. Very telling, I think. I'm very positive still. Now let's look at the price chart. If you just look at this in isolation, this is a 50-period moving average here in white. As we come into it, we bounce off it. That is a bull market. That is an uptrend. We've done it again. There's not confirmation of this. If you look at the daily chart here, the RSI very weak, and we've had this downtrend, right? So weak prices. We're trying to recover here. We're trying to print a bottom, but we haven't broken out yet. So if you're looking at very short-term trades, maybe you wait for the confirmation to see if we actually start getting more buyers in that are starting to chase. That would maybe break out of this downtrend. That would be a decent trade. I've got my long-term trades on for this cycle still. I use very low leverage on a tiny bit of my portfolio, so it's never going to get liquidated. And I just want to earn a little bit more. Just keep active in trading and trying to make some out of the bigger moves in the cycle. So that's what I'm in. But I think the cycle is basically still in a bull market. We're not drawing down, and I think the macro is in actually a pretty good spot, even though I think it's just going to be a lot different to other cycles because that stimmy pouring in, they kind of don't want to do it as much, right? They want to leave it to the free market, which is actually a good thing and actually sets up markets better, but we have to be a bit more patient. If you do trade though, Bybit deposit bonus down below. If you don't trade them yet, $30,000. Anything you deposit, they'll give you a bonus. If you can't trade on Bybit, check out Bybit's DEX, which is Apex. Again, a deposit bonus and a permanent fee discount if you use a link below in the description. If we look at this liquidity cycle, it's hardly topping out, is it? And so what is the liquidity cycle? Debt creation, right? The creation of debt, the availability of debt that pushes through the economy, banks being incentivized to create debt through government policy or government rhetoric and action. So it's hardly topping out, is it? We would look for a top out around 2026. Now, 2025 is usually the top for Bitcoin in a bull market, right? So you look at the 4-year Bitcoin cycle. I think we have to look more at the macro data now rather than the Bitcoin cycle. This could be pushed out into 2026. This administration very clearly want to draw things down right now. The rhetoric over the last few weeks, we're not looking at the stock market. That basically says, hey, drop it 10%. That's basically what they said, right? We're not looking at the stock market. We're not going to support it in our rhetoric or anything. We're looking at other things. So stock market comes down. It's actually good. That's what they want because they're looking at the midterms in 2026 in the States. They want to solidify power there. They want the bull market to continue to 2026, right, into those midterms. And so they're going to draw it down now, right? Draw it down now. Draw down the stock market. That does draw down prices and the kind of feeling of investors, right? So you spend a bit less if you think your stocks aren't going up, your assets aren't going up, right? You're a little bit more worried. That can draw down GDP, draw down inflation, and that's what they want potentially to give them room for everything else that comes out over the next year or so, which is tax cuts, deregulation of banks, energy policy, etc., which is potentially hugely bullish for markets as they incentivize credit creation, which is currency debasement. They incentivize stimulus. Lower taxes is stimulus because you spend the same amount, you take in less. All of that's going to get worked out, but there's a lot of, let's say, stimulus or good news for markets to come, and they're trying to actually draw it down now and set expectations lower so that they can go harder towards the end of this bull market. That's what they want. Whether that will happen, we don't know, right? You take risk in markets. Cyclical bull markets, median duration right here. I think this is slightly misleading, to be honest. If you look at most bull markets, they go a lot longer than this, right? So they want to draw it down now. That gives them a lot more firepower and stimulus and say, hey, look, markets are drawing down, GDP's a bit soft, let's get our tax cuts through. So it's all a game, right? It's a political game, of course, that we're playing right here as well. But median duration here, they want to push it way further, right? They want to go into late 25, 26, midterms in 26. A lot of their policy that they want to get through. Draw it down now, gives them a lot more firepower later in this bull market. If you look at inflation as well and the Fed rate's way too high, right? Way too high. It's going to come down. Inflation's coming down. If they draw it down now again, the stock market coming down in the States and a lot of wealth is in the stock market and stock-based compensation and other things are all related to this and the price level as well. So if they draw that down, right, it literally means the price level can come down a little bit. So they draw it down, expectations come down a little bit. That gives them firepower to go later on in this cycle. If they can just get it a little bit weak, that gives the Fed a lot of room to come down as well. And government policy can change and they can have that firepower there to negotiate more tax cuts, more deregulation, which is what they want, right? So that could set up for a very good tail end of this bull market. So the Fed rate can come down, inflation can still come down. They're trying to draw it down now, right? But look at global M2, exploding here, which Bitcoin has a very high correlation to. China into inflation, they want to stimulate. Europe wants to spend, way more money on defense and everything else. Stimulus is there, and they want it to come. And in the States, we're just going through this negotiation right now. They need to draw things down, and that gives them a lot more firepower towards the tail end of this bull market, which could go way, way longer than this. And so that's my base case. We don't know, right? We don't know exactly, but to think we're going to have a bear market here, it doesn't make sense to me. If we get weakness, that gives them a lot more firepower to negotiate tax cuts, deregulation, etc., which then is another boom. A bear market would be, we've had the boom, we've had all of that, and inflation is starting to inflect to the upside again, and the Fed needs to raise rates. That's completely opposite what we're in right now, right? So if you just look out a little bit, there's definitely some good news on the horizon, I think. But you've got to be patient through all this, because it's a negotiating phase. There's going to be a lot of volatility, as we know, in Bitcoin, but things potentially are set up pretty well for this bull market. Coming to AVIV ratio as well, which is a great metric to show if Bitcoin is overheated or not in terms of its price cycle. So AVIV just shows the kind of market cost of the network, or the mean cost of the network right here, right? And the Bitcoin price above or below, that would be indicated down here, above and below. So bear markets, Bitcoin goes below this, right? In bull markets, you just tend to kind of trend higher. And then the top of the bull market, things get crazy. That indicates a very high price for Bitcoin in relation to its longer term trend. So this comes down to the individual. If you've got an 8-year time horizon, buying at the top of a bull market, it's actually not the end of the world. If you've got a short-term time horizon, buying there isn't great. If you look at where we are right now, we're actually not overheated. It's actually quite soft, right? The market price is quite soft in relation to the longer-term trend, but you've got all that potential softening to come with the central bank potentially coming softer, government policy potentially coming softer in terms of tax cuts and everything else, right? So if you're looking to accumulate, pretty decent, I would say here. And then you've got potential of market recoveries as well. So one of the fastest corrections ever, that was this one in the stock market. Now, if you look, I've shown you loads of these. In the bear market, I was showing you all of this. When you get drawdowns, you buy, because 3, 6, 12 months later, you have very high chance of actually making money, right? Like 80 or 90% chance that if you buy assets when they're fairly weak, that usually rise, right? So Bitcoin, I think we get that now, S&P, other indexes, right? We expect them to rise over time, valued in dollars, because dollars the base. And so if you buy when asset prices are relatively weak, you wait a while, you have a very, very high hit rate on actually making money. So that's where we are right now. I'm actually really, really positive, because markets have come in a little bit, but there's a lot of fundamentals to go. If you look at the manufacturing index, this is just one piece of data. It's soft, right? We're in a soft period right now. And so that's actually good, because when you have softness, you get government policy that comes in and starts to stimulate again. Trueflation versus UMich inflation survey. Trueflation has been showing softness recently as well, which may come out in the government data. Government data is always lagging. They want that to lag because they want that to lag policy. They want to create the inflation, debase the currency, create more debt to fund what they want before that comes out in the data. So that's why government policy lags, because they want to cover up what they've done for a while. And real data is showing softening inflation. Retail sales, again, back to trend. Again, if you have softening in prices, then retail sales will look soft. It doesn't mean it's a recession. It doesn't mean people are buying less stuff. It just means what they're buying costs less, right? So they're softening things up, I think, to have firepower to go and negotiate tax cuts and deregulation and more bank credit creation over time. So that's where I am right now anyway, and a slight recovery. If you do trade crypto, Bybit deposit bonus down below, up to 30K. If you can't trade on Bybit, get a permanent fee discount and bonus on Apex as well via the link in the description. I'm James, this is MyZG. Cheers for watching, and I'll see you in the next one.